Hi guys, John here, Mr. Forex Fire. So it is the 27th of December and it's 22 in the afternoon. I'm just going to go over something which is got to give credit to Anton, who is from MentFx, someone who I've followed for a long time. And it's called a 3-box method, where we're going to be able to get in on a trade. And it basically, all it is, it's dumbing down the Wyckoff method, Wyckoff strategy, or better still, like a double mitigation, which is a 2b2, a lot of people know by. And I'm just going to share the screen. And let's just make that a little bit bigger. And get my head there, right? So what we're doing is, you can see on here, as we get the wand in, okay, I'm going to try and make this as easy as possible to follow. Get that in there. Right, so you'll see on here, we've got highs, lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And there's a bit of a trend on a down push going on here, okay? Now, if we notice from this last lower high to a lower low, okay, we do from that liquidity area there, we can see there was a bit of a break of structure, okay? You can see in here, that clearly has broken structure from there, and then we've got a pullback coming back towards the trend. Okay, and when it's bounced from this trend, it hasn't sort of broke the high point from here. So what I want to do is this here, just going to mark that off. This here becomes a break structure. Okay, so that's a break structure point. This is where liquidity currently resides, back on the return down. Okay, now to trade what we call a 3-box strategy, what we're going to do, you'll notice we're on a 1-hour time frame at the moment. Okay, so we've got the lower high to the lower low. Okay, so we just go on here, we'll mark from lower high. It's not the biggest, 14. So we've got a lower high point, and then the impulse drive down, we've got a lower point. So what we're going to do, we shall box swing high down to that swing low area. Okay, now that's your lower high to your lower low. It's contained. We've got the liquidity area here of the structure. That's the sell side liquidity. Okay, and if we just drag this over the top, and now we have our area contained within the current trend, within the current swing point. Okay, so on the top, we've got the buy side liquidity. So you'll see here, buy side liquidity. So that's your buy side liquidity there. This underneath would then be known as the sell side liquidity. So this is contained within its range. And once we get a breakout of either the lower low or this higher high, we then have that breaker structure and then a possible move on structure. Now, when it comes to identifying these areas and a run on the play of the trend and the Wyckoff and things like that, we're going to use something called like the rule of 30. Okay, now the rule of 30 is, it's basically your time frame. So however many minutes is in your time frame, you're generally going to be using the 1 hour, 4 hour, or daily, which is best for this, in my opinion, when I back tested. And on this instance, so there's 60 minutes in the 1 hour, you divide that by the rule of 30. Okay, so just to be visual for you guys, so we've got on here how many minutes in an hour in the 1 hour time frame is 60, just divided by the 30, the rule of 30, that's down to 2 minutes. Okay, now I'm currently in on this trade and it's doing really well. So that's a 2 minute time frame. So what I want you to do is you now know how to identify a breaker structure. So you then mark out your lower high and then your lower low. You've got your breaker structure marked. You've got your buy side liquidity marked out. And then you've got it zoned on the bottom on the sell side liquidity. From there, you've got an order block. Now, your order block is always the last buy before the sell, or the last sell before the buy. Okay, so what we would do is we would mark this one in the blue. We would get this one in an orange. Now I'm going to repeat that again. Okay, the order block, which is this here. So this drive up to the low high, it was the last buying power before we got the impulse down to make a breaker structure. Okay, this clearly come down to make the breaker structure on there. Selling power, we got the breaker structure, right? So you've got on the 1 hour, so I must stress this, on this, you could do this on the 4 hour, but what you would do is you'll just divide your 4 hour by your 60, and you know, you will get roughly around, I think, around 240 minutes on the 4 hour, and then divide that by the 30. I think that brings you down to the 15-minute time frame. So your rule of thumb is the rule of 30. Okay, so I've gone on the 1 hour, I'm dividing that simply by 60 minutes by the 30, the rule of 30, which gives me the 2 minute time frame. So we've got the impulse move down, marked in blue. We've got that boxed up. We've now starting to get the move. We're now starting to get the pullback from that lower low back up into the field of play. Okay, so now what we're doing now here is we're building liquidity. I'll just get this up on here. So now we're building liquidity as we move back up to the area on here. Now, what I would normally do is, you'll see on here, we've got the order block and it's shaded in orange. Okay, and we're nicely flagging up to here. You'll see we've actually ended. Now, what I would normally do, because this is now into the order block, I will go along to here and I would set an alert earlier than what the entry of the box is. Okay, so I would set an alert and my alarm would go off on my train view. Okay, now again, we'll run through. We've identified a breaker structure on the downtrend. Breaker structure, we've boxed off the lower high, the lower low. We've got the two boxes consisting of the impulse on the 1 hour. We've got the trend coming back in, and we've got the order block marked off. Right now, as soon as your alarm triggers, as soon as your trend is, it's building liquidity on the way back up here. Now the idea is, as soon as it comes up to here and it enters into here, you would then do your rule of 30. So your 60 minutes in the 1 hour time frame, your 60 minutes divided by your 30 is going to give you a 2 minute time frame. Okay, so we're going to go 2 minutes, and then what we are looking for is the entry area. Okay, you can see on here, let's just get this bigger and get this bigger again. Now, what you've got here now is an order block within here. You can see that this is the order block, the last buy before the sell. Okay, we've come up, we've come down. So we've had a breaker structure still on this area here. Okay, so you've had a little bit of a pullback. So a little bit of a mini breaker structure there. Now, as it's come back in, this here has mitigated beautifully into this order block. Okay, so what you will be ideally doing is placing a short on that order block there as you've come down on the time frame from the 1 hour down to, in this instance, the 2 minutes. Okay, and you would then hold your structure just above the area of here, and your targeting area is going to be, okay, the bottom side of, if we go back up on the hour time frame, your target, and this is going to give you a 1 to just over a 1 to 8, okay, and this is going to give you a target on the sell side liquidity area. Let's just get that sell side liquidity area, and you're going to take partials on the way down. So this is the idea. Is so what you're going to do is, when you get to maybe this area, when you get to maybe this area as well. So these would be your TP1. So you've got a TP1, and then you've got a TP2. Now, what you would generally do on this, guys, is you see on here, this is when the TP, there's a 1 to 3.45. You could possibly close out half of your lot size. So on this instance, I'm actually testing these, and I've been doing this for a few, for just run up to Christmas and just after. I've been doing very, very small, minimal lot size because I don't like to trade during Christmas, and I'll close out half of the lot sizes that I use. Okay, so let's say if I do a 0.05, I'll possibly close out at 0.03. So I bagged a nice bit of profit on that, but then I would move the stop loss to break even plus a couple of pips. Then I would let it ride. Okay, now the preference is we are wanting it to run down to the sell side liquidity. Okay, this is a risk and reward of 1 to 8. So far, on the little bits of testing that I've been doing and doing the 3-box method strategy, it's been doing fantastic, simply because what we're doing is we're boxing and containing that 1 hour structure in, and then we are setting the alarm before it comes up to touch the order block of the 1 hour. So in this instance, again, it is this here. This was the 1 hour buy before the sell impulse down, and we set our alarm on the side as shown. As soon as it touches into here, it alerts us to tell us to get ready, because we could be entering into the area on here. Once you enter into the area, you then got to use again that rule of 30 plan. Right now, what that's letting you do, it's putting the time down fractal wise. Once you've got an entry and a push back from that system, you were then looking for the order block on the smaller time frame. And because you've got 60 minutes individual, the fractal nature in the 1 hour, you're just dividing the 60 minutes by the 30, right? So that's your rule of 30. And again, your minutes on your 4 hour, I do believe by the time you divide it up, it's going to be around about 240. Then you divide that by your rule of 30, which I think is going to give you around about a 15 or a 16 minute area. I've been testing this a lot on the 1 hour and the 4 hour. I haven't tested much on the daily, but the 1 hour and 4 hour, on the 1 hour, you're going to be going down to the 2 minute time frame. You could possibly get away and do the 5 minute as well, to be fair. And then on the 4 hour, you're going to be going down around about a 15 minute time frame. Now you can see on here, this is working well. We've touched beautifully as we've come up the breaker structure on, it was the 2 minute. And as we look further in, okay, that was the order block from where the 1 hour order block was nested, okay. And as we've pulled out and done the breaker structure from here, we've come back into touch into that order block, and now we're off to the races and we're pulling down. If we go back to that 1 hour, you can see it's pushing down very, very nicely. It's currently at a reward of 1 to 3.75 on that alone. Again, I haven't closed any profits out on my end just yet. I'm going to let it run a bit more, and then I'm going to go to move the stop loss to break even. I'm going to be doing a lot more of these videos going into the new year. So, okay, I just thought I would drop this little video in here now, just so you can see that and the stuff that we're going to be doing. Again, give massive props out to Anton at MentFx, who I've been following for a long time. This is an absolutely fantastic way of being able to sort of trade and refine your entry on when it's following the trend. Okay, because after all, this is what this is doing. You've got your lower highs all the way down on it. You've had your trend coming down. Okay, you've had your highs, your lower highs, your lower highs, your lower highs, your lower highs, and it's a continuation of trend. As we've got the pullback coming back into the order block of the previous lower high, you're just refining your entry. Instead of entering straight on that order block of the 1 hour, you're taking the rule of 30 into consideration, and you drill and refine it down even better, giving you these fantastic risk to rewards. Now, will this play out? It may not, but this is why we also have the TP areas, and you close half your profits, and you do things like closing your half your profits and move the stop loss to break even plus a few pips. Because even on small lot sizes, if this was to give you that, like I say, this TP your first TP, you close half your profit off. It's a risk-free trade. So when you've moved your stop loss to just above break even if that goes back and pushes back up towards here, nothing's lost, simply because you've already bagged half your profit, you've closed half your profit off, and it's closed out just above your break even, or just below your break even in this instance. So then you bagged a few more pips. The benefit you get out of trading this sort of style, this sort of way, is if this does give us the push and takes out the sell side liquidity, which is what we are anticipating to do based upon the knowledge of this downtrend happening, it's just going to give you an absolutely fantastic risk to reward. Now, if you can imagine your FTMOs and things like that, if this one trade was to sort of play out based upon that 1 to 8, that's a pass on an FTMO. Again, I would stress, and I would still say this, I would not recommend doing a full 1% risk on this. Maybe when you've sort of done the smaller lot sizes, builded your pot, and you have accumulated some profit, then you can start looking at risking a little bit more risk, a risk to reward ratio sort of thing. So I would generally only risk around about 1/4%, or just below 1/4%. Get a couple of these in, bag a couple of TP1s, move the stop loss to break even. Even just a few of those hitting you and you getting them right, okay, it's going to build your pot up. Eventually, you can then start risking 0.5%. And I can guarantee over time, there is a higher chance that you will get through these challenges, these prop firm challenges and things like that. It's always good to have these on when you've got a bit of a trend going, okay, and you want a reversal back to an order block, or like I say, on these 1 hours. I entered this afternoon. It's doing pretty well for me at the moment, but that's how we would do the 3-box method. Okay, guys, let us know what you think in the comments below. If you're not already involved with anything, because I'm going to put this on YouTube as well, you can click on the links in the description. Come on board, join the community that we're in. This will already be inside of my Discord, but we've got so much more going on inside of here. Just let me know your thoughts, and if you need any extra help with anything, just reach out to me. That's what I'm here for. Okay, guys, so that's it for this video. I hope you've all had a fantastic Christmas, and there's going to be so much more of these going into the Discord area as well. From around about the 10th of January onwards is when I'm going to be getting back onto my trading. Okay, guys, so I'll catch you later. Catch you all later.